All right, so we're moving into the end of 2025 and we are my team is starting to look at both wrapping up this year as well as as we project into next year. What are we anticipating? What's going on? A lot of news that's been hitting, in terms of interest rates, all the different things, and just trying to figure out hey, what are we predicting for next year, and how do we set our goals? So and so I think it's a good time as we start planning next year. We're really looking backwards at this point to start analyzing, okay, how was 2025? How are things moving? How is the market overall? And what I find is that I get a bunch of different opinions about the market depending on who I talk to and depending on what is happening. So I could be talking to other agents, and depending on how their year's going, the market's horrible, the market's great. Buyers and sellers, depending on what they're able to find, depending on what their journey has been, it could have either been the greatest year for them or the worst year. And then, you start looking at metrics where it's the amount of inventory that hit the market this year. How did that affect the length of time it takes for sellers or home sellers to be able to when they hit the market, how long is it taking them to sell their house? So this week, what I wanted to do is I wanted to break down the existing home market and really just take a look at 2025 compared to 2024, break down a couple of different segments on what I look at. And at the end of it, the reason why I think it's important is because I think it comes down to how we communicate, how the market's moving, and understanding there's different segments within the market. So I really want to get into just a little bit of nerdy data stuff that I think is super helpful, and it helps us. I think once people see it and they start connecting it, it can help to change kind of maybe some of the perceptions in regards to how this market moves. And so let's go ahead, let's get into it. All right, guys, it's Bill Stewart again here with the Bill Stewart Homes team at Remax Moves. So like I said, we are literally in the middle of 2026 planning. We're almost done. As some would say, we're behind the ball. We actually have been planning for a while, but it's really now starting to put numbers to our goals and trying to figure out what we can anticipate. So, but in general, what it came down to is how was this year? Our year this year was great. We saw a tremendous amount of growth in terms of the production level that we were able to do and get done for our clients. Reality is without our clients, we wouldn't have anything. So hats off to all the clients that trusted us. And at the end of it, we're super thrilled to continue to move into 2026. But the idea of when I talk back and forth with different individuals, depending on where they are, their perception of the market could be very different than what mine is. And so sometimes I think that information does permeate, and it makes it a little bit harder because one person's opinion could definitely tarnish something else when actually that opinion was not based in fact. And so I like to work data because it helps me kind of rationalize in my mind what I know is true, which is no matter what the market, good interest, good market, bad market, interest rates high, prices high. Heck, even through the market crash in 2007, 2008, there were still people that needed to buy and sell homes. There was, life changes happening, things like that. I know the statistics, 3 to 4% of the market turns over every single year, regardless of these things. But it's very easy especially in this, profession to easily get swayed based on what others say or what others are doing. And so I just kind of separate myself from those things and really look at the numbers. I feel like numbers are comforting to me. So if that sounds like you, great. We would probably get along. If not, the goal is, I know most people are not. So the thing is that try to make it as digestible as possible in order to help people connect the dots on their own. And at that point, to continue to support them throughout our relationship, regardless of whether they're buying or selling, even if they're just curious. The idea is that we're trying to get as much factual information as possible based off of actually what's actually happening versus how I feel. So anyway, I built this spreadsheet, and in this spreadsheet, what we're going to take a look at is really, I just wanted to take a look at, again, this is just going to be single family homes that we're looking at. We're not looking at condos, townhomes, land, commercial, or anything else like that. I think we had about 17,000, little over 17,000 total real estate units closed this year. And when we take a look at the existing home market, both new construction and single family home market, I should say, that makes up the largest segment of the real estate market, at least, on what we're seeing. So at that point, I'm just really kind of breaking that down. A lot of what we do is single family homes. not to say that we don't do townhomes or condos, but in general, like most of our clients are homeowners. And so at that point, like that's what I was just wanting to look at. So 66% of the market is the existing home sale versus, roughly 34% of the market that is new construction. So I hear a lot of things about new construction. I hear a lot of opinions about new construction, how new construction specifically affects the market, why I can't sell a house, what happens. Not to say that there aren't areas in the upstate where new construction definitely can have a lag effect if at the end of it, you're trying to sell your house, your existing home. If you're in a neighborhood with new construction, it could be almost impossible sometimes because you're competing now with that builder and the neighborhood's not completely built out. So why would I choose your home over a brand new home when I can pay less and I can get the incentive from the buyer or the builder that, the seller themselves of an existing home cannot compete with that way. It may not, or at least financially they can't keep up at that. Not that they're not willing to, they just wouldn't, they can't lose. They're trying not to lose money. So the idea is that builder has a lot more firepower to get homes sold. And their goal is to sell out the entire neighborhood. If you happen to be in an area like certain parts of Greer, Duncan, Greenville, Woodruff, even as you start moving out towards like Piedmont, Pelzer, well, not really Pelzer, but Gray Court, those kinds of areas where you're seeing a lot of new construction neighborhoods that are going in and a lot of inventory going out there. Yeah, it could make it a challenge if at the end of it, you're in the same pricing segment as what those new construction homes are, right? If you're competing for a first-time home buyer with your existing home, then at that point, that first-time home buyer could potentially be lured unless you have something that's of absolute value that is going to supersede whatever that builder is willing to go and that a buyer is willing and able to pay a little bit more for that unique selling benefit. But in general, across the board, the reality is like it only makes up about 34% of the market. So it's not that new construction has taken over and that nobody's able to sell their homes. I think it comes down to, again, we're talking micro markets here within Greenville. All of these are broad brush numbers. None of these are specific to a neighborhood, a street, a side of town. You could be in one zip code or another. You could be attached to one school district or another. There's a lot of different factors that could basically could drive behavior, and so at that point, it's all about understanding your market segment within the Greenville market. But what you can see here is, average sale price for an existing home, roughly right around a little over $440,000. Average days on market, 41. We sold 4,300 homes in new construction. Average sale price about $380,000. Took 72 days on average to sell new construction homes. Now, the disparity, like I see, the separation here. Why is it much more? New construction could be on the market a lot longer. They're just they're literally trying to sell a home, and it could be from the time that they actually break ground to where the home's complete. They could have that listed, on and off over that time period, trying to get a buyer who's willing to buy something under construction versus full built. So I think some of this is not necessarily that the buyers weren't there, or that the days on market are that much higher. It's just kind of the strategy and the tactics that they're using. But overall, we're looking at an average price point of $421 and 51 days on market on the average if you take just the existing homes and at that point break it out based off of the home sales year to date. Okay. Now, compared to 2024, right now we've sold 12,800 homes. Last year we sold just under 11,900 homes. Last year, 68% of the market was the existing home market. This year it's 66. So slight change. It means that, the new construction homes came up a little bit, about basically at the same percentage, about 2% higher. Days on market, a little bit different. It was 35 days on market last year for existing homes versus 41 this year. 73 days on market for new construction homes versus 72. I'd say relatively consistent, but I would say there's a lot of factors that are driving this days on market. And that's kind of one of the things that I wanted to talk about today is I don't know if it's necessarily the market. It's a market problem. I firmly believe that there is a market interpretation problem. And that is what's driving our overall days on market. Not that there's not enough buyers, not that there's not this or that. It's the interpretation of both market, what market's willing to bear, pricing, where we're getting our pricing, and all of those, like so many different factors that at the end of it, we're looking at aggregate data versus micro market data and making assumptions based on a much larger piece of pie, like a much larger pie versus like breaking that up into it, the slice that it needs to be, and interpreting that. So I'll get to that in a second. But the active listings, we did have inventory that hit market this year. There was a lot more inventory that hit market this year. And so at that point, like when we start taking a look at out of the active listings, there's about 4,600, a little over 4,600 listings right now that are active. Of those, about 37% of those are new construction. In various phases, whether it's they still need to be built, they're either it could be under construction, it could be new, never lived in. There's a lot of different, a lot of different phases in there. But 63% of the market is still existing homes. And so at that point, like, when you start looking at 66% of the market that's sold, we're basically seeing that those inventory, the percentages of inventory and percentages of sales are holding relatively, what I would say, like clicked in together. When we start taking a look at now breaking down just the active, the existing homes that are on the market, and looking at when we start talking about days on market, right? I know that the average is 51 here. So what I was curious to see was how many active listings have been on the market, say longer than that 51 days. So I just chose 60 days and said, how many homes have been on the market longer than 60 days? And then what does that look like? So out of the 2,931 active listings that are on the market right now for existing homes, 1,688 of those, almost 58%, have been on the market longer than 60 days. The average price point for those, $610,000, right? Now, there's a lot of things that could be said here where it's like, that market's slow or these kinds of things. What it really comes down to is like the average home sale right now from an existing perspective or just in total is a little over $400,000 for an average home. When your average list price on these homes is now basically working at close to, if not very close to, almost $200,000 over the average homes that are actually selling and that buyers are transacting in, this means that it's also going to be, there's fewer and fewer. The more expensive homes get, there are fewer and fewer people in the market that can actually afford it. So it's going to take a little bit longer, depending on where the price point is, it's going to take a little bit longer for these homes to sell because of the fact that like there's not as many buyers that are able to afford it, which I think comes back down to the idea that this is incredibly important, especially as you move into the higher priced homes, that your condition, staging, cleanliness, repairs, is paint looking good, all of just the general condition of that property better be buttoned up because you do have other competition. You got 688 other homes that you're competing with that have been on the market for over 60 days. And at that point, like, that means that buyers have a lot more choices that they can look at. So at that point, condition makes a big difference, which ultimately we'll talk about in days on market in a minute, why that is going to be super important. So now that I'm seeing that where I'm like, oof, man, that's like 58% of the market, 58% of the active inventory has been on the market over 60 days, that at that point, the higher the price point, obviously the longer it's going to go. So now I want to take a look at, well, how many homes that are under contract right now? And of those homes, how many homes were under contract within 30 days? How many of those homes took longer than 60 days to get under contract? So we're looking at here, 30% of the homes that are currently under contract, either contingent contracts or pending contracts, they're basically 30% of the homes were under contract in under 30 days at an average days on market of 14. Price point was right around $444,000, $445,000. Okay, compare that to your average price point for existing homes at $442,000. Like that seems to make a lot of sense. The closer to that average that you're going to get, probably the faster it's going to move as long as condition and price are in alignment, that at that point, like, yeah, that should move pretty quickly. Now, when we start looking at over 60 days, just like in the existing home listings here, 499 homes are under contract. It took them longer than 60 days to get into a contract, but you can see their price point's now moving up closer to 5. It's taking about 104 days for them to get there, but it makes up 46% of the homes that are actively under contract out of a total of just under 1,100 homes that are total under contract with an average home price of $464, $465. And now at that point, they're sitting and their average days on market as a whole is 61. You see how this all kind of like the numbers constantly shift? How can I have one day on market? Why can I have another? Well, reality is, depending on what pricing segment you're in, you could be in a 4 to 600,000 range, 6 to 800,000 range. You could have a days on market in Mauldin of one thing. You could have a days on market in Simpsonville on another thing, all in the same price point. It really boils down to understanding that you could be in the same market where it's balanced and have one side of town be in a buyer's market, and you could have another neighborhood across the street that's in a seller's market, all while at the end of it, it's basically balanced, like statistically it's balanced across all of Greenville. So really it boils down. You could have a bidding war on one side, and then you could be basically begging for buyers on the other. It really boils down to like what's happening in your specific like micro market. So if you have questions on what that means or what that would look like, feel free, reach out to me. I'd be more than happy to like walk you through it. But the idea is that these numbers are not static. So when we start talking about Greenville as a whole, average price point being this, average days on market being this, average list to sale price, which we'll show here in just a second, all of these different statistics that get blown by, if at the end of it, I'm telling you it's 51 days on market, yet at the end of it, really for your micro segment, it could be 104, 105. Well, when it gets to 51 days on market, what do you think a client is going to say at that moment? What do you think a home seller is going to say to me if I told him 51 days and now it's taking double the days on market? I feel like I've set a horrible expectation for my clients. So I want to make sure that we're looking at all of these numbers and we're breaking it down where it actually makes sense to them. So, we talked about the idea that we were selling, roughly about 8,500 homes in the existing home market. So, I start looking at like active listings, how many are on there, what's the average in terms of listings now that are sitting for over 60 days. Contracts that we're seeing 46% of them taking, over 60 days to get under contract. So at this point now I wanted to look at, okay, well, is this anomalous, or is this now part of the existing home? Is this how even homes that have sold throughout this year have gone? And then I wanted to take a look at time and money, how all these things go. We talk to clients all the time. You want to price well because at the end of it, you're going to get your best offers up front. That's where you're going to get the most money. The reality is it's easier for us to talk that way. It's harder for homeowners to sometimes visualize what that looks like. And so I kind of wanted to see basically a rate of change over time, how that broke up to list to sell price ratio. And I'll explain some numbers within there in just a second too. But, I just wanted to take a look at when I'm looking at what CDOM is combined days on market, how that is our cumulative days on market. Sorry. What that means is you could take a home and list it and then pull it off the market and then put it back on the market. The days on market counter will change, but your cumulative days continue to count. So if you were on the market for 14 days, took it off for a week, put it back on, it didn't count the 7 days that you were off, but it would count the 14 when you came back on. And I want to see what cumulative days on market look like, not just days on market, because that can skew things too. So, what I wanted to look at was like, out of all of the homes that sold this year, what's the percentage of homes that sold, say, under that 30-day window? But then I saw that the combined days on market was roughly 14. So I was like, well, how many homes sold under 14 days? As a total. Well, what we saw is almost a little over 3,300 homes sold. Like that's, almost 40% of the market that sold within 14 days at an average sale price of $437,000, a little over. Average days on market were 5. Their list to sell price. So what they listed their home for and what they sold for, basically they got almost 99% of that list to sell price. Now, caveat to this, there are going to be times where Agents will put in what we consider off-market deals into, maybe they didn't list on the MLS, but they help to facilitate the sale in order to get credit for like that actual sale, in order to have the statistic put in for their brokerage for themselves and all those other things. They are going to do what's considered an MLS only input. And so at that point, that sale will go in and it will have a 0 day on market capture. So I just want to say there's going to be a certain percentage of these homes here that is there. But the reality is, if these homes are currently under contract and we're looking at 30% of the market there, that goes under or went under contract in under 30 days and an average of 14, then at that point, like I would make an assumption that it's not going to be much more than, say, that this is probably going to be closer to like 31%, if that holds true, because you wouldn't put a contingent or pending on a home that was just an MLS input. So I would say, 30% is sitting here, realistically 31, maybe 32%. So either way, it's still a large percentage of homes that are hitting the market. Buyers see them. They're priced well, their condition looks good, and buyers are willing to jump in less than, in under 14 days to, at that point, put it under contract, and then at that point proceed to close. And I think that says, and they're also getting 99% of their list to sell price. As you start moving into your 15 to 30 day period, now you're looking at like 15% of the market. There are 15% of the homes that sold that went there. But you can see now your average price point went from $437 down to $426. It took about 21 days to be able to get there. And your list to sell price ratio is roughly a little over 1.5, almost 2% different, right? It's moving down. Okay. 31 to 45 days, you can see basically that works out to be 10% of the market. Again, you're seeing like an $8,000 drop in the average sale price. It's a 36 days on market, and that you're losing another 0.5% from your list to sell price. Okay. Now, this doesn't take into account, it does not take into account any sort of price change. So it's not looking at the original list price to the actual sold price. It's looking at the most recent list price and then to that sold price. So there could have been, a 10, 15% difference that came in the journey for some of these homes to sell. But so we will do some analysis on that. In fact, that's one thing I wanted to be able to get for our clients, is to make sure they understand these things. But just for this, I didn't want to go too granular in all of these different things, because I know sometimes people can be bored by numbers. But then what I think is interesting is you start to see an inversion here at 46 to 60 days. And again, this comes back up top to your average days on market as it relates to active listings. Again, up here where you've got homes prices that are sitting over 60 days, average list price around 610,000. Well, guess what? As they start going here, it's taking a little while for these houses to sell, but in general, like after 60 days, then at that point, then you start to see some, $1 million home and a $200,000 home could easily, the two will average each other out. And now all of a sudden you've got a $600,000 average. That a lot of that is happening here. So it's a dilution, but you're also seeing that your list to sell price is still down by about 0.1%. Your average days on market's roughly 48. So even though the average sale price is moving up, that's where sometimes it can be lulled in that really boils down to understanding your price segment and what's your price range. And at that point, making sure that you understand the behavior and the data, the analytics that follow within that specific price point to really understand. Are you in a buyer market? Are you in a seller market? Are you in a neutralized market? The reality is, like, depending on where you are in that spectrum can make a big change. It will ultimately adjust or make changes to the strategy that will be needed to be built in order to get that property sold. Same thing here. You move over 661 days, you start to see that works out to be, anything. It took 61 days plus to sell. It's about 30% of the market. Average sale price here was $464. Again, 98 days was the average. Obviously the higher the price, the longer it's going to take just because of the fact that your buyer pool becomes less and less. But you can see here it drops by another 0.5%, little over 0.5%. So time and money are going to be very tied together. Like the better price you are, the better the condition, the better all of these things, and how you attract the buyer will ensure that you're actually going to get the most amount of money. Now, back to the point of what we were talking about here from a price adjustment or price changes. If you put your house on the market in less than 14 days, you've got offers that are coming in. What do you think the chances are that you're going to be willing to take an offer $10,000 under ask versus, having buyers feel like in order for them to secure the property, they're going to have to give you their best number? I mean, realistically, under 14 days, most people will be like, we just went on the market. We're just going to wait. So it comes down to when it gets past that first 2 weeks, buyers get a little bit more bold in terms of like what they're willing to offer, and sellers are also becoming a little softer in terms of what they're willing to accept. So this is the reason why this list to sale price ratio is so important to monitor. At least in this, I would like to do some further analysis because I think that this is not necessarily like the full story, but the idea is that you can see it starts to that gap starts to widen the longer a home sits. And especially when it comes down to your 45-day windows. So depending on where you are in price. So anyway, it's really the idea of when we start talking about, pricing, we start talking about market conditions. We're trending ahead this year. We're trending ahead of 2024. We did a mid-year check-in where we were basically pacing ahead of the COVID years here in the Upstate. I have yet to do that analysis. I'll probably do that towards the end of December, at the beginning of the year as part of a year in review. But I did this because of the fact that I get information all the time. I talk to agents, I talk to home sellers, home buyers. Everybody's got opinion of market, how market's moving. Everybody's got their own ways of being able to calculate and put things together. I want to say this, none of this is like me, so this is my personal opinion, but this is how I look at things, and I feel that it has worked for us in that we have, we've had great success this year helping clients navigate the market. But the reality is that I feel like some people, I hear where it's when we're pricing homes, that we're strictly looking at price per square foot based on past sales behavior, what buyers are willing to able to buy in the past, but then at that point, not taking a look at current condition as well as what the, in terms of, where buyers are actually looking. And then at that point, figuring out also how we compare against our active listings, because that's our direct competition. Those are the people where we are. I see people where it's like, I don't even look at comps anymore. I'm just looking at active listings and going from there. And I saw a house the other day that was $150,000 overpriced because I know what they're doing. I know that they were looking at their active competition and saw that they felt that they could price in. What they failed to understand is the average sale price in the neighborhood that they're listing in hasn't reached over $480,000, and you're sitting over $600,000 on that listing. The reality is, it doesn't take a rocket scientist to figure out that one's overpriced. So it has been on the market for over 120 days, but the reality is it was not that it should never been priced that way. It was because of the fact that there was a misinterpretation of how to price and how markets move. You have to be aware of the past. You have to be able to analyze the current, the present. Present is going to be the present time is going to be contracts that are currently like homes that are under contract, what they're paying, what they're doing. And then at that point, trying to connect the dots to figure out how to actually predict the future, the probability where you can take demand and supply and you can figure out where that is. And your demand is going to be your buyer. So there's plenty of ways to see where buyers are looking, what they're doing, the price points that are getting the most activity, and be able to break that up into a micro segment to have those conversations where then at that point you at least know the traffic patterns or at least the price points that buyers are looking at, and then connecting that to the property and your activity to then at that point shore up your probability that, hey, with 80% certainty, I feel like we can get this house under contract over an X amount of time. And that is really where I think a lot of times where I hear half of it, yep, that makes sense. But the other half, you're missing the other half. Yep, this half makes sense, but we're missing the back half. I'm not saying, like I said, I'm not perfect. There's things that we're constantly learning. I'm constantly analyzing the market. How did that house sell? Why isn't our house selling? We've got listings that some of them are very unique, and it's going to take a little bit of time before they actually get under contract and we know it. But then there's others that have gone into bidding wars and have gone off the shelf. I would say most of our inventory has moved pretty quickly and within 30 days of the market. So it's not that it's not possible or but you're never going to be 100%. There's no such thing as a 100% batting average. Real estate is a practice. It's a constant evaluation, making your best guess to, in essence, be able to help your clients navigate, and your interpretation of the market, I think, is hugely important. And I think going into 2026, we saw it became a very technical market this year, which I love. I think it's great. And I foresee 2026 to be a very similar market in that I think things will get better, but that there will still be things within the market that need to be understood, that even in a good market, there are always going to be nuances, that need to be analyzed and managed. So hopefully this is helpful. If you have any questions, if you want us to get with, if you want to answer have us look at anything or have me look at anything, feel free. My contact information is down below. I would love to answer any questions or have a conversation to help you understand a little bit better. Really, at the beginning of the year, we'll do a complete year in review, but all points are good. The real estate market here in Greenville is still thriving, but you have to understand it and interpret it, and then at that point figure out strategies in order to win. But the reality is there's nothing that indicates that the market is falling down or anything else like that. It still looks to be pretty strong, and looking forward to a great 2026. So any questions, like I said, just give me a call. If not, I will talk to you soon, and we'll put up a better pricing video here in the next couple weeks. Hope you have a great day.